All right, today we're breaking down a company that wants to completely rewire the plumbing of the financial world using blockchain. They're called FIGR Technology Solutions, and with a big IPO on the horizon, we're going to dive right into their official filings to give you the full investor's perspective. So to really get our heads around the investment case here, this is our roadmap. First, we'll look at the massive problem FIGR is trying to solve. Then we'll get into their blockchain-based fix and, the important part, how they make money. From there, we'll weigh the exciting bull case against the very real risks of the bear case before wrapping up with the key takeaway you'll need if you're thinking about this IPO.
So let's start with the why. Why does a company like FIGR even need to exist? Well, it's because the system for capital markets, especially for something as common as a home loan, it's a mess. It's a patchwork of old, clunky systems, mountains of paperwork, and a whole bunch of different people who all have to spend time and money just to trust each other.
It's a fair question, right? All these old systems create these huge bottlenecks. We're talking about records of ownership that are still on paper in some cases. It makes everything painfully slow, super expensive, and just full of potential errors. And that friction, that's exactly what FIGR was built to get rid of.
And you can really see the impact of that friction right here. The industry median to get a home equity loan funded is a staggering 42 days. FIGR's platform, with its own loan origination system, just crushes that, bringing it down to only 10 days. That's a huge, tangible difference.
And if the slow timeline wasn't bad enough, check out the cost. The Mortgage Bankers Association says the average cost just to produce a single mortgage loan is over $11,000. That's for everything: appraisals, title searches, underwriting, you name it. And then you see this. This is FIGR's answer. By automating pretty much the entire process, from a 5-minute online application to using digital models for valuation, they've slashed that cost all the way down to just $730. The difference is just incredible, and that's their entire value proposition in one number.
So how in the world do they do this? Well, it all comes down to their tech stack. It's all built on one core idea: using technology to create a single source of truth, so you don't need all those expensive middlemen to trust each other.
This right here is the engine, the Provenance Blockchain. It's a public ledger built specifically for finance. Every single asset that goes through FIGR's system gets recorded on it. This creates a permanent, unchangeable history of ownership that anyone involved can check instantly. It's literally about replacing expensive trust with pure mathematical proof.
And here's what all that tech means for the actual customer. That 42-day nightmare of paperwork turns into this simple 4-step digital process that can get you your money in as little as 5 days. This speed and efficiency, that is the product they're selling to their partners.
Okay, the tech is cool, for sure. But the big question for any investor is, how do they actually make money? So let's take a look at how FIGR turns this cool tech into a real business.
So for the first half of 2025, you can see about 3/4 of their revenue comes from their main lending business. That's fees, but the biggest part is what's called gain on sale, basically the profit they make creating a loan and then selling it off quickly. But what you really want to pay attention to is that other slice. It's growing fast, and it's driven by their marketplace and new tech products.
But the real story here is the bottom line. Look at this. After some really strong revenue growth, the company went from losing $52 million in 2023 to making a $20 million profit in 2024. And that profitability is picking up speed. This right here, this is the growth story they're going to be pitching to Wall Street.
All right, so that brings us to the bull case. If you're an optimist, if you're a believer in what FIGR is doing, what are the key arguments you're making? Why could this be an absolute home run? Well, the bull case is all about one word: scalability. The idea is that their loan system is a platform that they can sell to more and more partners. Then there's their marketplace, FIGR Connect, which did over $1 billion in volume in its first year. That could grow like crazy. They can launch new products on the blockchain, like their YLDS stablecoin. And the big dream is to take this tech that's proven in the home loan market and use it to attack much, much bigger parts of the financial world.
Okay, but of course, it's not all sunshine and rainbows. Every investment has risks, and you have to give FIGR credit. Their own filing is super clear about the hurdles they're up against. And this is a big one. In the first half of 2025, just their top 10 partners were responsible for 57% of their total loan volume. I mean, that is a massive dependency. If even one or two of those major partners walks away or just slows down, it could have a really serious negative impact on FIGR's bottom line.
And the risks don't stop there. They're up against intense competition from big banks and other fintechs that have way more cash to burn. The regulatory world for both lending and crypto is an absolute minefield. Plus, the company itself pointed out material weaknesses in their own financial controls, which is basically them saying, hey, our internal accounting needs some work. And finally, that gain-on-sale model is super sensitive to the economy. If the capital market sees up, so does their profit engine.
Okay, let's pull this all together. We've seen the problem, the solution, the money, and the big arguments for and against. So after all that, what's the one thing you absolutely need to walk away with?
At the end of the day, it really boils down to this trade-off. On one hand, you have a truly disruptive technology that's shown it can save a ton of time and money, and it just hit profitability in a big way. On the other hand, you have very real risks from competition, regulators, and the fact that so much of their business relies on just a few customers. It's a classic high-growth, high-risk opportunity.
And so that leaves us, and you as a potential investor, with the one central question you have to answer for yourself. Have they really built a defensible moat with their technology? Or will the big banks and regulators eventually catch up and close the gap, wiping out that early advantage? That right there is the multi-billion-dollar question. Thanks for digging into this with us.